Let's shift focus from the technical view and get you a more fundamental view on the market. Joining us live on Street View at lunch is Sonam Udasi, Head of Research at IDBI Capital. Afternoon, Sonam. Thanks for joining us on Markets at Lunch. First up, obviously what we're seeing today is a rally driven by global cues on account of the move by the ECB. What's your sense? Is there more leg that you think there is to this rally?
See, for the timing, I mean, it has come as a relief that, there is a clear intention of some sort of bailout in a big way in the European region. However, the only thing is that when the German courts meet on September 12th, if they can throw a spanner in the works. If they don't, I think the rally should sustain. I would actually just put a caveat here. For us, really, we would have got, my worry is that if the reforms and fiscal movement does not take place, while money may be printed globally and there may be a risk-on appetite globally, India may not get a fair share of that, and we may start losing out on the incremental numbers. So I think that's the only risk. So India is a risk only because of itself, really, not because globally money is not being printed.
Sonam, now that there has been a clear verdict coming in that there isn't going to be any fuel price hike, would you recommend shorting the OMC basket?
See, frankly, we have never been great fans of OMCs. Except for BPCL, we have been advocating, avoids on all of them. BPCL is a space saver simply because it has some sort of exploration blocks that we are quite bullish about, and there is some visibility on that. It is a clear, actually more than that, we are more worried about what effect it will have on the overall fisc. We are working with estimates of under recoveries of about 60,000 to 70,000 crores for this financial year. If there is no, issue in sight because of this, and if this stalemate continues, then the under recovery could go up beyond 1.5 lakh crores plus. So that could, set your fisc deficit target in the range of 6% plus. That's a bigger worry for us. I mean, and again, investors will take note of it. So that's why I was saying that even if there is a global risk-on rally, India will only participate in a big way and give the kind of beta it has always given once the risk-on strategy is on, is when our own, there is a clear confidence that there is something taking place to take care of the fisc problem.
So now, what's your call on IT stocks? In this market environment, would you advise investors to look at IT stocks, and within the basket, would you be more biased in favor of mid-cap IT stocks or large-cap IT?
So clearly, the preference is towards mid-cap IT stocks, simply because one, the large caps are sort of priced to perfection. Everyone is, getting favored by the rupee-dollar equation. So even the mid caps will, or the small caps will also get this tailwind. There is a huge valuation gap between the mid caps and the large caps. So I think that should close out, and therefore, to my mind, money should be put in the mid caps.
So Sonam, give us some ideas wherein you are recommending your clients to buy even at the current juncture.
So within IT, we are looking at stocks like Infotech Enterprises. Within the consumer appliances space, our top 5 continues to be Hitachi. So we think that those will do well. Among the cement space, we prefer Grasim over all the others. So there are bottom-up stories that we have. Among banks, we like Bank of Baroda in the PSU space. We like Indian Bank from a risk-reward perspective. Among private sector banks, we prefer ICICI over Axis.
What about defenses, Sonam? Anything that you like in the pharma and the FMCG pack, even at these valuations?
See again, our own sense is that even among defenses, there will be a large, the valuation gap between the large cap and the mid caps has sort of grown over the last few months. I think that should start to narrow. So stocks like Jyoti Laboratories, maybe an Imami, will see a better performance as compared to say a Nestle, which is already priced at some 35 times 2-year forward earnings. So I think that should play out.
Okay, Sonam Udasi, always a pleasure chatting with you on Markets at Lunch. That's the Street View coming in from IDBI Capital. Let's